SoFi to pay $300,000 to settle SEC charges related to conflicts of interest over 2 proprietary ETFs. Oh my god! Alright, it's time to sell SoFi stock, everyone. It's a stock. You're better off putting your money into diarrhea coin at this point. And in this video, I'm going to show you exactly why diarrhea coin is a better investment than SoFi. Nah, but for real guys, I know this SoFi settlement is now almost a week old already, but I figured it's better to cover it now than later. And as always, I'm going to explain in simple terms what exactly this means for SoFi and what you should do as an investor or future investor in SoFi. Okay, so first and foremost, let's not kid ourselves here. SoFi has a pretty ugly looking chart. And I mean, it's definitely had some nice setups for swing and day traders, but it hasn't really been kind to long-term investors. Still though, it's up about 35% on the year. So with that in mind, let's discuss the SoFi lawsuit. Okay, so SoFi Wealth specifically is the one that's under fire here. And SoFi Wealth is only a unit of SoFi Technologies. Let's be clear about that. SoFi Wealth is an internet-based registration investment advisor that uses proprietary software to provide investment advice to their clients. And now they've agreed to pay the SEC $300K to settle allegations relating to conflicts of interest over 2 of its proprietary exchange-traded funds, better known as ETFs. So basically, the SEC sued SoFi Wealth for putting preference on placing clients' assets into its newly created ETFs that were sponsored by its parent rather than third-party ETFs. This then helped to market the SoFi brand as having a broader array of services and products than previously offered.
These proceedings arise out of breaths of fiduciary duty in connection with its April 2019 investment,
the SEC said in its statement. So by this point, you might be saying, okay, what's the big deal of transferring clients' assets into ETFs that directly benefit SoFi? Well, listen to this. According to the SEC, SoFi Wealth transferred assets of 200,000 clients from third-party ETFs into its 2 proprietary ETFs without informing the clients. So to actually do this, SoFi Wealth used the proceedings of the sales to purchase positions in the 2 SoFi ETFs. And to me, this is kind of the icing on the cake of this whole situation because this resulted in tax consequences for many of those clients. More specifically, over 15,000 SoFi Wealth clients incurred capital gains taxes as a result of the move, with the amounted total coming out to $772,000 in short-term capital gains, according to the SEC. So basically, of the initial 20,000 clients who had their money moved without consent, to add insult to injury, 3/4 of them would then have been charged capital gains taxes.
We're pleased to have resolved this matter with the SEC,
a SoFi spokesperson had later said in a statement.
As a company, we treat compliance with all applicable laws and regulations as our top priority.
So you might be wondering by this point, what exactly does this mean for you? And will the stock continue to sink lower? And to answer that, it very well could. However, I don't think this should be looked at as a long-term deterrent for the stock at all, as I still strongly believe that SoFi will be able to hit a price of $50 in 1 to 2 years. And you have to realize that all major companies have hiccups and court filings over the span of each company's lifetime. It's just kind of how things seem to go, unfortunately. And being that SoFi has been pulling in hundreds of millions of dollars in revenue, $300K isn't anything to SoFi. If anything, it's just a slap on the wrist from the SEC. Of course, this isn't really a good look for SoFi either, but to be perfectly honest, I've seen a lot of other companies like Wells Fargo and Bank of America do much more sleazy things than this. So to be honest, I think shareholders of SoFi should have nothing to worry about long term. However, if this stock keeps falling, I will definitely be buying more, as I already believe this stock is in prime buying territory right now. However, if we see lows of $10 or below, that's the point where I will definitely be buying more shares. But to be honest, I think we should just see how this all plays out. SoFi is still a relatively small company, but they are continuing to grow year over year. And as long as SoFi can continue to grow and provide real value to its customers, then shareholders really have nothing to be worried about. Anyway guys, that's the video. Thanks as always for watching, and I'll see you next time.